Everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, March 10th, 2024. Hope you guys are having a fantastic weekend, and let's get started. The I should say the I'm trying to figure out the right word for it. We have the non-farm payrolls that came out, and really, they're kind of the dumbest things. They're nothing but lies. That's pretty much the way to put it because this has been going on for I want to say over 2 years, where they give these stupid blowout numbers that nobody is even coming close to anticipating. The ADP numbers that are the real numbers because they're getting the actual the data from corporations is going in the totally opposite direction that non-farm payrolls is going. And then what happens is they put out these blowout numbers and then revise the month before by like 150,000. It's getting to a point where it's just kind of silly. And I don't think I think the non-farm payrolls is going to be, it's going to turn into a non-event because nobody believes anything about it. And I think you're going to start seeing like ADP numbers and other types of real data kind of move the markets a little bit more than the non-farm payroll. But in any case, we had the numbers that we got a little bit of a pop, and from there we just saw selling for the rest of the day, and it picked up some steam. And it made sense. I mean, it really did because you just can't when the majority of the numbers, that are being created are through the government, and everybody else, the increases in wages are, they're saying they're moving up, but all they're doing is counting them working more hours. So it's really, like I said, it's going to be start becoming a non-event because nobody's really believing them. But as I said, we saw some selling. It ran right into the support right here. So if the Bears are going to try to turn this into something, they have to get it through this support right here, and that's the 51, say 20 area. If they do, there is some support right here at the 50.94. But notice what could be forming right here. I have it. Here's the neckline. Here's your left shoulder. This could be the head. So if we come down anywhere near here and then bounce back up, and we find resistance, at the say 50-day moving average on the hourly, and then head down, this is going to be your head and shoulders pattern. And it's really going to be, almost to a T. This is, you look up a head and shoulders pattern. This is what it looks like. But before we could even go anywhere near that, we have to see what the Bears are going to do. Are they going to be able to push it through this support and move down into let's say the 50.62 area, then bounce up and come down? Because I mean, actually be a not a bad size move. We're talking the top 51.88 and the bottom here is 51.50. So it's not really 51. Yeah, actually it is. It's going to be about 100 and about a little over 100 points. We're at 150, about 130 points it will be. So that's going to come from here. So if this pattern was going to play out, we'd be looking at a move coming down to the 100 points, right around the 49.50, somewhere in this area here, which would be closing of the gap or using this support. But again, that's if this pattern plays out. Should it play out? Yes, we have the bearish divergences on the hourly chart. If we look at the daily chart, we have bearish divergences, and we had bearish divergences on the 15-minute chart. So again, this move made sense, and now we have to see what the bears can do. Can they get it through this support level? Because if they do, again, the next stop's probably going to be somewhere down between the 50.93 and this gap right here at 50.79. And then obviously this support level right here at 50.56. So there are support levels, but the patterns could be not bull friendly if they play out, and we could see a move testing the 49.50 level. And it's something we really haven't seen in this market since October, over a 200 point drop. So we have to just kind of keep an eye on things, see how things play out. And really, the first one, this is going to be our range right here. So we're going to know pretty early on Friday, on Monday, what's going on, because this is our range that's set up. You have the low at the 51.17, and we have the top at the 51.50. Whoever breaks through these level first. So if we go up, Then we're probably looking at a move coming up to the 5170 area, maybe a little bit lower than that, 5165. But if the bears can take this out, that's where we'd be looking for a move to test the 5091 or down to this more likely to 5056, which would set up the head and shoulders pattern. So this is it. It's fairly simple. If the Bulls win, then we're coming back up to this level. If the Bears win, most likely we're coming down to the 5650. So you want to see how things are going to open up on on Monday, and we'll keep an eye on the with the credit spread trades where the range is after the open and place them. So let's take a look at. I want to just go over some of the trades that we made on this. So this was the one trade where I got stopped out, and the way that I put this, it's fairly simple. I mean, I put in the trade and used my formula to set the stop, and when we got stopped out, we made $100. Or that's because what happens at the lower end of it, we were getting paid a little bit more. So it's either going to be a break even stop, even maybe even making a little bit, and or losing 100. But the thing is that your stops are set. It's a formula, and this really should be it. Where if you do get stopped out, it should be no harm, no foul. And basically, when I got stopped out of these, I think I was going at 5165, 5170. So when I got stopped out, all I did was roll the call end of the trade up higher to the 5175. I forget, I think it's 5175. Hang on one second. So 5175, 5180. Again, put the stop in place for this, and it was after we had that little run up, because I kind of had a feeling it wasn't going to bust up into the up into the 50. I'm sorry, this was it right here, 5185. This was the put side of it. I'm sorry. So this was the put side of it. This never was going to come into play. What I did is I rolled them up to the 5180, 5185, 5190. So when I got stopped out of the 5165, 5170s, all I did was roll them into the 5185, 5190, set my stop, never got triggered, and was able to close this trade with a 33.50 profit. Now we ended up doing before that in the day. We had these. This was just another one of the trades, and it worked out good. We ended up making 3,300 in a pretty quick time period. And so again, you just you add it up. It's not going to be like this every week, but it was it's a decent week, and that's only making money on two of our trades, and that's really the way this whole thing goes. And I've even put in something crazy at the end of Friday, and this isn't part of the class that I'm going to be teaching, but what it basically there's a live link, you could see it. Once I put my order in, I put the stop in, and I didn't even watch it. I came towards the end of the day because I wanted to get out of the trade before the market closed. But I didn't even pay attention to it because I knew if I got stopped out, there was really going to be no damage to anything. And the trade ended up, closing right within my range. And that's really the important part of this, is figuring out your range, figuring out what strike prices you want to use, and then just placing your stops. But it's a live link just to show you how I did it, and it may end up making $1,500 in the last 35 minutes. So it's a fairly simple way to do this, and it really does remove the emotions from it. So back to the our reports here. This is our range. We have the 5150 down to the 5115. Whoever wins this wins the range. And with that, enjoy the rest of your weekend, and I'll talk to you guys in the morning.